Need a haircut too.
Hello, everyone. Welcome to the weekly roundup. Today, we'll be covering the US job market, elections, and earnings releases. Hello, Ben.
Hey, Eva.
How are you doing today?
Pretty good. It's last day of the trading month of August, so it's been a
Oh,
pretty decent month, so that's good too.
great. Okay, let's dive right in. There has been, excuse me, there has been a recent uptick in the US unemployment rate. What does this mean for interest rates and the health of the economy at large?
Yeah, so the kind of that move through the longer term moving average, that SOM rule that we talked about a little bit, once you start to move back up through it, I think we're at 4.3% unemployment in the US. That's rising. That's certainly caused I guess some concern. Certainly it was part of the conversation last weekend at Jackson Hole when they were central banks were meeting to talk about what's going on in the US. So I think most of the data with that included, it points towards the fact that they're going to cut rates next month. And it's just, I think the pace of which those cuts are going to come right now is 100% chance they're going to cut in September, at least 25 basis points. But there is a probability increasing that they're going to go 50. I'd be pretty surprised if they did that, but certainly unemployment rising is one of those things that leads to cuts likely. But unemployment, as you know, is a lagging indicator.
Yeah.
Certainly, we're probably already seeing that in the economy right now.
Okay. Um, let's go political a bit. The race to the White House. Any new insights from yesterday's interview and the run-up to the elections in general?
Yeah, so election voting is starting soon in the U.S., depending on the state that you're in. Some of the U.S. states are voting or are mail-in ballots only, which is very archaic, I think. But the U.S. Does things a little bit differently. So voting is already starting, I think, in about a week and a half now at this point. So it's a 2 months out. And November 5th is the election. Harris and Waltz last night. I think there's going to continue to be a divide as we move along here. I try as best possible to stay impartial and listen to what they're saying and what they're doing. I don't know if the interview helped or hurt. I don't love that they did the interview together. It kind of took away a
Yeah,
little bit from the message, I think. But as for their first kind of discussions out together, it was a decent start. CNN was a friendly interviewer, I'd say, not super combative. And so I think that'll be interesting. And the debates between Harris and Trump are going to be quite different. He's got tons of experience, Trump, and we'll see what happens there. They continue to try to put legal pressure on him. That at this point it's not going to have much of an impact. So I think, the next 2 months here are going to be quite interesting to see how things play out.
absolutely. Let's dive into earnings releases. I know the Canadian banks had mixed earnings and tech giant Nvidia released their results as well.
Mhm.
Any highlights of the numbers and what were the general market sentiments?
So the banks were definitely mixed. So TD and BMO came in with softer earnings, and I think the bigger point was loan loss provisions went up quite a bit, where BMO's loan loss provisions went up something just shy of $1 billion. And so those two were a bit of a surprise. CIBC, RBC, and National Bank, we all had quite good earnings with loan loss provisions barely moving. I think ours was around 175 million. National Bank, our acquisition of Canadian Western Bank continues to move ahead. So yeah, pretty divergence there, and RBC seems to be able to continue to trudge on and do a good job. They've done a pretty good job with their integration now with HSBC. I think those systems are all fully integrated and jobs changed there. So that generally be worth watching. I would have expected historically you get loan loss provisions rise altogether. So definitely interesting to see TD and BMO diverging. And then your question about NVIDIA. So NVIDIA certainly had, good earnings, but their growth rate can't continue. And I think that's what we saw here. Quite a bit of mixed reviews with what came out from them. They had, earnings beat, guidance was fine. I think probably not as much as the market liked. Stock traded down 7% after hours. By the morning, we kind of got back to break even. Stock rallied into the day, sold off pretty hard yesterday, down about 6 or 7%, dragged the rest of the market down. And today it's been continuing to bounce around. But, if you look at the composition of the S&P, which is the major market that most people look at in the US, it's 7% Nvidia, 7% Apple, and 7% Amazon. So 21% in the top three names. You get quite a bit of market movement when any of those report. And, some of the technicians that I follow don't really like the action happening right now in NVIDIA. So I'd say if we see a breakdown in that in the next couple of weeks, it could be some downside pressure in the markets, but certainly not as good as everyone expected.
Okay. Anything else catch your eye this week?
So I think there were a few things. I think one of the which I'll show a slide on, but it went out in the daily today. Just kind of this view on Japan and their interest in natural gas was something that I hadn't really seen or anticipated before. But it seems like when the world about 10 years ago was diverging from natural resources, Japan started to make their way towards more attention and time focused on it. And you can see them with financings, either in many parts of the world, also pipelines and shipping lines. And, you see natural gas come into Japan and then get shipped out to other parts of the world. And, as you dig into that, which I did a little bit, I didn't realize that they're a major superpower now in natural gas. So that was quite interesting.
Yeah.
So we'll certainly dig into that as we move forward here.
Okay. Great. Any changes to the portfolios this week?
So not material, but certainly I've been spending a lot of time looking at the fixed income space and saying, what do we do with the positioning? As you know, we've hold a fair amount of government bond exposure in both Canada and the US and some internationally. And corporate spreads have moved out a little bit, and so the yields are a bit more attractive in the corporations. And so I've started to look at what would be some good alternatives to switch into that are offering better yields and better risk-adjusted returns from now. So spent a fair bit of time looking at those options, whether individually or ETFs or in the fund space. So that's likely to happen in the last quarter of the year here. So I've been spending a fair amount of time looking at that.
Okay, good one.
Mhm.
Let's go into the charts.
All right. Let's see let's get them up today. All right. All right. So that further to the conversation we said of what caught my eye this week. So this is just a view at the largest fleet. So this is Japan's liquefied natural gas fleets. So China and Greece would be number two and number three, but Japan by far 134 boats that ship natural gas around the world, liquefied natural gas. So this really surprised me. I thought I knew the space quite well, but when I saw this last couple of days, this really jumped out at me, and it shows really where they're integrated. Recently announced they're helping finance a facility in Australia as well. So this was something that we'll continue to track and see what percentage that means to the Japanese economy and really what that means kind of bigger picture. Something else that jumped out a little bit is the Federal Reserve in the US. They have repo agreements with a number of different money market funds and banks in the US, and something that caught my eye here as they've been pulling back some of the issues that they deal with. They've been pulling back and kind of taking away their agreement. So DFA, short-term trust, Allspring Heritage Money Market, and Prime Master Fund, which is a UBS high savings investment vehicle. Interesting. This tends to happen when they start to get concerned about the ability of those companies to pay back the money to them. And so as you see this start to pick up, it's not one specific thing, but this tends to show you that the quality and the health of the underlying financial system is deteriorating a little bit. And so I thought this was worth paying attention to. DFA is a pretty big fund company in the U.S., and if the Federal Reserve is starting to get concerned about their liquidity and their ability to pay it back, it's something to pay attention to. So we've talked about Canadian jobs a fair bit, and I think a number of the charts that have shown up on the roundups over the past couple of weeks just around who's hiring. And this is quite an interesting chart just to show you the share of total employed Canadians who work for public sector. And so 1 in 4 Canadians now work for the government. And so, as you've seen the private sector been laying off the last probably year and a half, and the only place that's been hiring has been public sector and the government side. So this is increasingly concerning. Great, obviously, that they're hiring, but concerning about the overall health of the Canadian economy when we see this number continue to tick higher. And just kind of the last piece, which is always interesting. I do like to follow a number of different people, but I thought this was a great quote that came through my feed at some point this week. And it's just a quote from Thomas Jefferson, obviously an old quote, but interesting just around how he talked about the risk to the banks controlling the currency, inflation, deflation, and it really some of the risks associated with this happening. And this has so many implications and really plays out a material role into what's happening today. And sort of last 50 years, this has been the case, and now we're starting to see a little bit more risk to our system. And part of why other assets, including gold and silver and Bitcoin and Ethereum, are starting to get attention is because people are looking for some alternative places to have their capital from the perspective of wanting to make sure they can protect the value of it. So I thought this was a great quote that jumped out of me from Thomas Jefferson earlier this week. That's it.
Okay, thank you, Ben. 1 in 4 Canadians. That's intense.
A big number.
Yeah, it is. It is. What's on the agenda for next week?
So Monday is a holiday in both Canada and the US, Labor Day. So not often that they line up together, so that'll make for a bit of a quieter day. Canadian data is a little bit quieter next week, but we see a Bank of Canada rate announcement on Wednesday next week. Federal Reserve's not till later in the month. Unemployment data on Friday for the US, so we'll be watching that. I think from an overall market perspective, we'll see what happens. See if we get some follow through here. The market's been super quiet from a volume perspective today. So I think a lot of people not engaged in the markets, trying to keep it pretty quiet and flat. But as we head into September, October, these are the most volatile months historically. October actually is the most volatile month of the year if you look back over the last 50 years. So we start to head back into a season where we want to be conscious of volatility kicking up, some potential more swings to happen. So we'd be watching for that. But all the kids are back to school next week, and it tends to result in a lot more activity and things like that in the market. So I'll be watching that closely.
Awesome. Thank you, Ben. Thank you for listening. Please visit and subscribe to our YouTube page, Hart Investment Group, and our daily blog, Daily Heartbeats, for more financial news and analysis. Thank you once again for joining us, and have a great long weekend.
Thanks, Eva. Take care. Thanks, everybody.
Bye.
Bye.